Hi, I'm Shae Russell, editor of Fat Tail Media, and joining me today from his home in Pennsylvania is Byron King. Byron works for Agora Financial and he's the editor of Whiskey and Gunpowder. Byron, thank you very much for joining me.
Greetings, Shae. Such a pleasure to be so far away yet so close from the courtesy of Zoom.
It's wonderful that we can catch up actually over Zoom. Now, you and I unfortunately really haven't seen each other since this time last year in Vancouver.
Yes.
So we have had a lot to catch up on about, and we had a fabulous rock show before that everybody should be jealous they didn't get to be part of. However, we've got a lot of things that we want to cover today. We want to talk about gold, we want to talk about military aggressions, and we want to talk about the rare earth investments. But to kick things off, let's talk about gold. We'll talk about the gold price for now in US dollars because it's been on one heck of a run. It's showing some real strength at the start of this year. So now that gold's trading up above 1,800 US dollars, do you think it's going to stay at this price point? Now, just this time last year when we spoke, you said 1,400 was the new 1,200. Is 1,800 that, or are we still testing out this level?
Well, I'm not going to quibble. I'd say 1,750 is the new 1,200. Right about now in the last day or so, gold is well over 1,800. I think today it touched 1,840.
Yeah.
It's the highest it's been since 2011. That's good news and bad news because in 2011 it hit a high and then it went down. So, in the idea of, what goes up goes down. The thing to keep in mind about gold is that the so-called price of gold is really the inverse of a reflection of the value of the dollar. Whether it's the US dollar, whether it's the Australian dollar, the Canadian dollar, the British pound, what have you. If the currency is moving up, then the price in gold is moving down. If the currency is moving down in terms of its buying power, purchasing power, then the number that we attach to the price of gold is moving up. When somebody says, "What's an ounce of gold worth?" I say an ounce of gold is worth an ounce of gold. That's what it's worth. And so when we say it's worth $1,840 today, that means that one US dollar is worth 1/1840th, of an ounce of gold. Now, when you think that 100 years ago, in 1920, not 2020, in 1920, an ounce of gold was a $20 coin in the US. You go from $20 gold to $1,840 gold. That's a difference of 92. So in that sense, the value of the dollar in 100 years has dropped, quite precipitously. I mean, it's gone up and down over the years, and the Depression and World War and all this sort of thing. But over time, gold is a way to preserve your wealth, and it's not a pet rock. I mean, a lot of people say, "Oh yeah, gold doesn't do anything." Doesn't do anything until it preserves your wealth during a time of inflation, which is where we are now. Before we came on, we were talking about inflation and what's that all about. So I guess that's enough on that. Lead on with your next question here.
I was about to say, well, my next question is, let's talk about inflation. In our little pre-chat beforehand, we were talking about how we are on the cusp of inflation and that precious metals might be the only option for investors to protect themselves going forward. So how do you see inflationary pressures unfolding in the US?
Well, in the US and by extension, the rest of the world, I mean, we've just seen in the last, 4 months, we've just seen this massive influx of, phantom money going through the economy. And I'm not saying it's a bad thing. I mean, we've got 50 million unemployed people in the United States. I mean, we 25 and some million people lost their jobs in just the last, 3 months. I mean, that's an incredible assault to the whole national economy. And, what do you do at a time like that? What do you do when your house is burning down? You squirt water on it. That's what you do. And if you have a priceless antique hanging on the wall, you squirt water on that too, whether you like it or not. You might not like it, but you do what you have to do. So Congress, the president, just threw money into the economy, literally to give people, money in their pockets so they don't starve to death, they don't get kicked out of their house or what have you. And then they bailed out a lot of businesses too. The number was about, it's over $4 trillion with a T,
Wow.
trillion with a T. So, and now we're talking another 2 or 3, depending on what Congress does in the next couple of months. So we're looking at $6 or $7 trillion of just money that came out of the Federal Reserve dumping into the U.S. economy to support businesses, to support people, to support the stock market, to support the banks. All of that's floating into the economy, just like a big Niagara Falls of money coming over the cliff. And it is inflationary. That's a third of GDP, gross domestic product, just within a matter of a couple of months gets shoved into the economy. Here in the U.S., where I am right now, I mean, there are, some prices are going up, some prices are going down. I mean, the price of gasoline at the gas pump is cheaper than it was, because the price of oil has collapsed. Okay, yeah, but the price of things at the grocery store, for example, many things are higher, or things are just not available at all. There are empty shelves. It's not that bad. I mean, I don't know what people are seeing in terms of their own media and whatever, but I mean, in the United States, if you're overseas, if you're in Australia, Canada, somewhere else, if you're in the Shae fan club and you're watching this somewhere, the electric power works, the water works, the sewer system works. There's fuel at the gas station. There's food at the grocery stores. There's actually toilet rolls, on the shelves. You can buy this stuff. It's not, whatever the media is telling you. The place is actually functioning, but it's functioning at a much lower velocity of money. I mean, the airline business is back where it was in the early 1960s. Automobile companies are having trouble, building cars because the workers are sick, or the supply chains are interrupted. I mean, there are issues. The point is, the question you asked is, what about inflation? The answer is yes. When you throw those kind of dollars, those numbers of dollars into a system, all those dollars chasing the same amount of goods, you're going to have inflation. It is starting to kick in. We are beginning to see the first bits of steam coming up through the fumaroles, to use a geological term, and this guy's is going to erupt. I know you're studying geology, Shae, so I'll throw a little geology at you.
Thank you. I appreciate it. I'm actually going a little tangent because of something you said. You just pointed out that some of the shelves are empty. I mean, that you can still buy food, like we can still buy the essentials, but a lot of the reasons why the shelves are empty isn't to do with the fact that there's shortages. It's because that there's been a supply chain disruption of where we buy our goods. And we're looking at a supply chain disruption from a lot of the goods that are made in China. So how do you see these supply chains being fixed? Oh, sorry, not being fixed, but are we going to bring more manufacturing back to, our local economy, or are we still going to rely on Asia as our labor capital?
In the U.S., there is a major level of discussion going on, and not just people talking about it. I mean, we're talking the policymakers, the politicians, the people who write the regulations of moving things out of China, moving the supply chain out of China. China has shot itself in the foot on this one. All those years and decades of money going to China are over. And it's not just the U.S. I mean, Japan, for example, has a major program to move companies out of China, and it's a lot of household names. The Japanese government is subsidizing hundreds and hundreds of millions of dollars worth of support for companies to move things out of China, not necessarily back to Japan, but from China to Thailand, China to Vietnam, China to the Philippines, China to Australia. So you're seeing that. It's not that different here in the U.S. I mean, where I am in Western Pennsylvania, we're a traditional manufacturing hub. We are an area where a lot of factories build a lot of things. The local business press, the local business times that I subscribe to, has all sorts of discussions about people looking for ways to reinvent their supply chain, reimagine their supply chain. And it might be something as small as a 25-cent circuit, a little fuse, or a little resistor or capacitor or something. It could be the solder that they use, when they're soldering. But they want to change the supply chain, and so we are seeing that. And yes, there are supply chain disruptions at the industrial level and at the in the food level as well. Some of those empty shelves on the store are because, for example, the Norwegian salmon isn't coming the way it used to come. Fruit from South America isn't coming the way it used to come. Those kind of issues. And so there, but to the credit of the supply chain managers and the traffic managers who run these things, I mean, it's really it's a miracle that some of this stuff is where it is, but it is, and it's available. And no, the roof hasn't caved in here in the U.S. If anybody's wondering, who doesn't live here.
The roof is still on. It hasn't blown off just yet.
Still have a roof over our head. Yeah.
Well, speaking of having a roof over our heads, we had a little chat before about the increasing military aggressions in the South China Sea. Now, we were talking before about the visible strength that's now being displayed between Japan, the US, and Australia towards China. So this circles back to what you said about China shot themselves in the foot. Arguably, they moved too soon. But what can we see? I mean, you're a former Navy man. I mean, you've even visited Australia many, many years ago when you were back in the Navy. What can we see from this sort of united front from Japan, the US, and Australia in essentially Australia's backyard?
Well, the couple big elements of it. I mean, one has to do with Taiwan, and the other has to do with the South China Sea. I mean, there's the constant long-term issue of how independent is Taiwan? I mean, China says that Taiwan is a breakaway province. Taiwan keeps quiet about it, and but they act like they're an independent country. A lot of the world trades with them like they're an independent country, and everybody just sort of polishes over the rough edges about well, we're not going to get into that diplomatic stuff. We're not going to. That's an Australian term. I think I should be careful saying that.
Yeah.
That's in the U.S. It's just sort of slang. But so Taiwan is one issue, and in fact, I'll hold this thought. Just a week or so ago, China put sanctions on the U.S. military contractor Lockheed Martin.
Yes.
With the final straw was that Lockheed is building an improved air defense system for Taiwan, and China says, "Oh, we're going to sanction you." And one of the sanctions has to do with they're going to shut them off for rare earths, which you need for advanced electronics. So hold that thought. That's one thing. Let's move a little south to the South China Sea. That's it's a big body of water. It's full of fish. It's got oil and gas underneath of it. Something like $5 trillion a year worth of world trade, flows through it. Oil, cargo. A huge amount of world trade flows through there. There are lots of countries that, under traditional law of the sea concepts, ought to have, claims in the South China Sea. Vietnam, Philippines, Malaysia, Brunei. But here's China with that 9-dash line. They say, oh, it's all ours, because 600 years ago, some Chinese guy sailed a sailing ship down there and threw a rock over the side and claimed it for the emperor, or whatever the story is. That's what they say. So the U.S., Japan, Australia, Malaysia, other countries, there's sailing ships around with great big flags, flying off the back. It's not the missiles or the torpedoes or the helicopters and rockets on their ships that's important. It's the flag on the flagpole that's important. They're doing these freedom of navigation things where they're flying, saying you can claim this, but we're going to sail through there. Meanwhile, China has built these little islands all through the place and built airstrips and put radar systems and missile systems and put their little Chinese army garrisons on there. And it's a big sort of kind of chest thumping thing. It's our territory, it's our blue sovereignty and all this sort of stuff. Where's it going to go? Well, there's the visible military power on the surface, the ships, the aircraft carriers, the destroyers, the cruisers, there's the airplanes in the sky that you see. And then there's the invisible military power, which is like these things right here. It's a Virginia class submarine. I know a few things about Virginia class submarines, but we can't talk about it, as nobody who knows anything about submarines talks about it. But all I'll say is that, there's two kinds of ships, ships in the world. There's submarines and there are targets. And so you can say all you want about the problems of various militaries, about the great capacity of the Chinese Navy and the small number of ships of, one country or another country, or the age of the ships. When it comes to submarines, the U.S. Navy is second to no one, and working in with allies, Australia, working with Japan. The blue territory of the world is still subject to respectful dispute, let's just say, and everybody who makes policy along those lines ought to know and ought to understand that those submarine devices back there, those ships that submerge, have a lot to say about who controls what. So I mean, the old joke about the South Asia was that it's a land of shopping malls and submarines. It's more true than not. So
it remains true to this day, and no doubt the increasing military tensions probably aren't going to go away anytime soon between the four nations.
No. Well, when that gets into the whole rare earth angle, I mean, when China embargoes Lockheed Martin, I mean, that's not something like China saying we're not going to buy another shipload of corn or soybeans or something. That's not that's not, when you shut off the rare earths are what make the world go. I mean, we've got the traditional metals, iron and aluminum and copper and all that. That's kind of how the world ran for the first 10,000 years. But for the last 30 years, the world's been running on rare earths. I mean, if you have an iPhone, like I have an iPhone here, it's a big one because big screen for my aging eyes here. But on this iPhone made by Apple in China, if there are 92 elements in the periodic chart, 63 of those elements are inside this iPhone. The rare earths are part of what make it work. The rare earths are what make the weapon systems work. The rare earths are what make these submarines work. They're what make the airplanes work. They're what make the missiles work. The guidance systems, the magnets, and what have you. And so that creates in many respects an entire new business opportunity in the West. I mean, up to now, China runs about 80 to 85% of the world's rare earths. But if they're going to be embargoing things like hitting the military-industrial complex right in the heart, rare earths hit Lockheed Martin. Okay, you made your point, guys. You made your point, and now guess what? All through the U.S., all through the Pentagon, the Joint Chiefs of Staff, the congressional committees, they're all saying, oh, gee, maybe we really should get this rare earth, thing working here in North America again, or with our allies, get to work with Japan, with Australia, what have you, and get our rare earth system up and running.
I'd actually love to talk a little bit more about rare earths. Now, just for a little bit of context for people watching, is this time last year, you and I were having a conversation about rare earths and the opportunities that were ahead, and that it was probably more of a strategic play rather than a sound business case. Now, given that China's recently turned around and said to Lockheed, no, you can't have our rare earths, where are the rare earth opportunities for investors? I mean, Australia's full of them, but is Australia full of the right kind? Is the US full of the right kind of the rare earths?
Well, yeah, in terms of the abundance of rare earths in the crust, rare earths are more common than silver. It's just that to get them all concentrated into little minerals that you can pull them out of the ground, that's hard and that's tricky. China has developed an extensive rare earth operation, an extensive rare earth complex at many sites. And really, my hat is off to them. I mean, I salute the Chinese for what they have done in terms of building an incredibly good rare earth system. But now that they're going to shut off, the West, because they're mad about, Taiwan or Lockheed or whatever it is. Okay, you've taken it to the next step. We get that, and like the reasonably smart and business-like people that we are, the West is going to have to readjust and recalibrate the whole strategy for it. Are there high-grade rare earth ores? Well, in Australia, you've got a company called Lynas, which has been working for many years. It's had its ups and downs, but the Mount Weld project out in Western Australia is a very solid ore deposit. The Linus business problem has to do with the fact that they're processing materials in Malaysia. They had issues over radioactive materials. And when you do rare earths, you're going to have issues with radioactive materials. I know that Australia is very sensitive about radioactive issues. I mean, even though you've got, Olympic Dam mine out there that, mines uranium and all this stuff, but you export it the rest of the world.
Yep.
Okay, I get it. The whole Helen Caldicott thing, okay, that's fine. But if you're going to do rare earths, you've got to accept, that there's certain amounts of low-level radioactivity, and you have to deal with it. Closer to home, in the U.S., there are very small-scale projects that are beginning. In the U.S., a lot of people think, oh yeah, that would be Mountain Pass, California. Mountain Pass, California has been bought and sold about 6 or 7 times in the last 12 years. And
wow.
I've followed it carefully. It is a very interesting ore deposit. It has rare earths in it, but the people who have managed it each time they've bought and sold it have always treated it as some sort of a financial thing, and some of the people along the way treated it as an asset strip. Now, in this new reality, the people who do rare earths really do have to treat them as a strategic business that has to support the industrial capacity of the U.S. and Canada and related allies who, because we all trade with each other on a respectful and friendly basis. I mean, I hold in my hand right here some of the highest grade ore in North America in terms of rare earths. I'll mention the name. It's a company called Defense Metals. They are in the project is in British Columbia in a place called Wichita. It's kind of like the middle of British Columbia. I mean, if you didn't know where it was, you'd never find it. But if you do find it, you'll find this. This is some of the highest grade ore in America. And Defense Metals has been working, drilling it up. And this is a mine mill, kind of concentrate project. The idea is that you want to get these minerals. This is a really beautiful specimen of a mineral called monazite. You would never throw this in the crusher. A specimen this big is worth hundreds of dollars just as a mineral collector's delight. But this is a beautiful, well-formed, well-shaped crystal of monazite. The monazite contains rare earth minerals in it. If it was just monazite sand, and there are mineral sand operations that mine this stuff in Australia, in South Africa, India, certainly in the US, in Brazil. If this was a monazite sand, you could take that monazite and you could process it and extract the rare earths out of it. You take the monazite, you grind it into a powder. I have little samples of everything for you.
You do. It's
you grind
fantastic.
it into a powder. This is monazite powder here.
Yeah.
And then you would take this powder and you would run it through a metallurgical process. You would dissolve it in acid, probably nitric acid, and then you'd do a whole lot of other things to it. And you would literally start extracting atom by atom using very advanced chemical separation techniques, the rare earths that you want. So you get a high recovery and a high purity. I'll mention another company that I think is just one of the leaders in that. It's Medallion Resources, a Vancouver company, but they've been working for years on the mineral sand angle. The good thing about mineral sands is that if it's just a mineral sand that's being harvested off of a beach or from a sand deposit, along a riverbank somewhere, you don't need to build a mine, and that cuts years off of your lead time. If with the right kind of funding, a company like Medallion could probably be up and running, producing, a rare earth concentrate inside of 12 months. Medallion's CEO happens to be an Australian guy. I'm sure that you'll speak with him. So anyhow, the answer is that by China, getting angry over Taiwan and sanctioning Lockheed Martin, they've elevated the issue to literally the strategic level within the U.S. and within our allied councils. Not everything works fast at these bureaucratic levels. It's not like everybody's running the 100-yard dash on this, but they have made the point, and so I think we are now beyond the arm waving strategic whatever angle of one of these days we're going to do rare earths. We are down now to the business level of we got to make this work in the U.S., Canada, Australia, using, leveraging the industrial skills of allies like Japan. And then there's a whole European angle to it as well, a NATO angle. It's wide open. I've written about it in Whiskey and Gunpowder, my newsletter, by the way.
Yes,
Which people can sign up for. It's free. It's free to you. I mean, it costs us something to publish it, but we have our own way of internally funding it.
Actually, I'll just mention that to my Australian subscribers watching as well, that they should definitely check out Whiskey and Gunpowder, because you certainly bring your geological knowledge to it as well as your economic experience to it. So it gives people a very good understanding of what's happening with natural resources. So it's not just US centric. That's the point I'm trying to make.
No, I'd like to think that we are writing for just, for an intelligent audience that's just, sort of out there and just wants to see commentary that's derivative of the news. We're not the news, okay? We're not going to bring you the news. We're going to bring you an understanding of the news. And we're published by Agora Financial, but it's St. Paul Research. So go, do Whiskey, Gunpowder, St. Paul, and you'll find it. And then you can link in and you can sign up. If you just do Whiskey, St. Paul, you'll get a distillery in Minnesota. So it might not be a bad idea.
Not in these times. Now, you had a throwaway comment there, but it actually ties in perfectly for something that I wanted to talk about. You made a comment about how Mountain Pass has been bought and sold 6 or 7 times in a very short space of time. I'm not sure how many people in the Northern Hemisphere know this, but one of Australia's greatest gold mines at the moment, Fosterville, was a lost cause for a very, very long period of time. It was probably bought and sold and passed around half a dozen times inside probably 20 years. In fact, until 2015, it was a dud mine. Nobody wanted a thing to do with it. It was a high cost, low grade mine. Right. Wasn't worth the lease practically. Mm-hmm. Then a Canadian company came along, Kirkland Lake Gold, sunk a couple of mighty holes in the ground. And arguably, I think they're responsible for creating what I've been calling Victoria's gold rush renaissance. The mine I'm talking about, obviously, is Fosterville out in Bendigo. However, there's another company, I believe, listed on the TSX called Fosterville South that has tenements right nearby this incredible gold mine. Could you talk a little bit more about what this company is doing? Because I believe it's got the right sort of mining DNA when it comes to, the team driving this company here.
Yeah, well, it's in the right place. The best place to build a mine is next to another mine. Yep. You've got your roads, you got your power, you've got a workforce, you've got, it's easier to get your permits and what have you to make it work. You've got your social license from the people who live nearby, what have you. So Fosterville South is sort of the cousin of Fosterville. What I like about Fosterville South, I won't get into a geological explanation of it. What I really like about it is that the management team that came in to run it is some of the same people who've done great jobs on other projects. North of Australia is Papua New Guinea. There's a group up there called K92. The management team that put K92 together, which turned a sort of a broken barrack mine into an incredibly productive mine for Papua New Guinea. That same management team's doing Fosterville South. These guys know how to be successful. They know how to put the right money in the right spot. They understand. They're not doing it as a financial flip like a lot of promoters do. They actually want to build the mine, make the mine work, make the mine make money. Before we came on, I showed this to you. I'll show this to the audience out there. This is what these guys were digging at K92 up in Papua New Guinea. It's a beautiful hunk of chalcopyrite and a few other minerals in there. But this is the ore body that they had at K92. And they when I say that this was a mine that Barrick never got it to work, well, they didn't get it to work, but this is what they were looking for, and then it took the other guys to make it work. And so so there you go. You want people who aren't just going to walk by the good rocks and just they're not so corporate, and they're not so bankerish, and they're not so financialized or whatever, that they don't think about the geology, and they don't think about how do we turn this hillside into something that can make us some money. And this is what I like about Fosterville South. in the last couple of months, I'd say the last, say, 2.5 months, the share price has gone up quite a bit, but the share price has gone up quite a bit with a lot of upside left in it, in my humble opinion. So, I mean, obviously, if you don't just go out and throw in a market order, and pay the highest price for the most distant shares or something. I mean, you wait for the down days, wait for pullbacks or whatever. Put in a low ball bid, or put in a laddered bid or whatever. Get some shares. But over the next period of time, I mean, we were talking about inflation when we began. The price of gold, the dollar price of gold, the Australian dollar, the Canadian dollar, the US dollar price is going this way. It's going up like that, And so companies that can find and produce real gold are going to be very, very valuable tickets. I mean, they already are. I mean, just today I saw an article in Bloomberg News. Bloomberg News. When Bloomberg writes about it, I mean, it is happening. Okay, it is a thing. It is a real thing. Billions of dollars are flowing from Wall Street and and the big banks and the big funds and the big institutions. They are flowing into the mining industry. They're flowing into the big guys, the Barricks and the Newmonts, what have you. They're flowing into the intermediates, and some of that money is even flowing into the junior guys, the junior space, which is where some of these huge leverages are available. I mean, if you buy a big company like Barrick, if you get a double, that's great. If you buy a tiny little company, you can get 10 baggers and 20 baggers. And ask me how I know
that. How do you know that?
Because I've done it.
Well, actually, that's a fantastic point where I wanted to move to. If Bloomberg's writing about all the money flowing into these sectors, where should investors be looking? I mean, we're talking about 10 and 20 baggers, and they sound impossible, but it's actually not impossible. It's just about knowing the right company to pick. But do speculative investors want to move into these tiny, tiny stocks? Or if Bloomberg's writing about it, do we want to move into the mid-tier guys?
Well, everybody is different. I mean, you have to do the little caveat here, all the legalisms, everything. Every investor needs to just, the most important person in your life is the man or woman staring back at you from the mirror. So look at you and look at where you are. I mean, if you know nothing about gold, if you know nothing about it, except maybe you've seen people with wedding rings or jewelry, that's what you think, then be careful about diving into this space. You can lose a lot of money in a hurry. If you have no gold at all, you should get some physical gold and physical silver. I mean, you say, well, how do you do that? Well, you buy a U.S. Gold Eagle or a Canadian Maple Leaf, or you buy from the Perth Mint. You buy some gold. Yeah, but that's just gold. Yeah, it's just gold. But we're in a rising market. You're gonna, whatever you pay for that gold, you're gonna preserve that wealth over the next. Don't try to trade these coins because you pay a premium when you buy them or something. But over the next 5 or 10 or 20 years, or it's generational wealth. A gold coin is the kind of thing that hopefully you will never ever have to try to cash it in. You will, when you pass away, years from now, your relatives, whoever succeeds you, will have something very nice waiting for them. When they go gardening in the backyard, whatever. It's if you don't have some gold, get some. If you don't have silver, get some. Whether it's bars or whatever, or whether it's coins. I mean, here's a 1873 U.S. silver dollar. I mean, I don't know if you can. It's not showing up on the screen. A little too much glare. But I mean, these are fun. These are just fun to have. So get some. Now, other ways to do gold and silver, whatever. Royalty companies are a great idea. The good thing about royalty companies is you're buying a company that isn't a miner. There's no operational risk, no mining risk, whatever. The big operational risk for a royalty company is that the mailman doesn't deliver the check, because they've put money out to buy a stream or a share of the production of a given mine or a given project. And so for the next however long, 5, 10, 20 years, that operation is just streaming money into these guys, and they deliver it. They distribute it out to the shareholders. Royalty companies, you can get everywhere from great big huge guys, Franco Nevada, multi-billion-dollar company, gigantic, all the way down to much smaller ones. Sandstorm is a nice name. Metalla, Metalla, nice name. There Osisko Royalties, Osisko Royalties. Nice royalty companies. That's not. Other things would be, mutual funds that are heavily invested in gold. Again, if you don't know anything about gold or you don't know much about it, you don't want to deal with daily management. You don't want to do stock picking. A lot of gold mutual funds out there. Do your due diligence, what have you. We're in a rising market for gold, so money in a well-run gold fund will tend to be safe and preserve value over time, keep up, if not get ahead of inflation. Now we get into the mining guys, we get into some names, and you got your big names. You got the Barrick, and the Barrick of today is not the Barrick of 5 years ago. It's completely changed the company around, a whole different approach to how much debt, how much forward selling do they do of their gold, how do they approach replacing their reserves. Different company today than it was 5 years ago, a much better company. Newmont, it's long been a very well-run company, still is. Again, very, very, very sophisticated approach to how they do their mining and what have you. All the big guys, all the big funds, all the big hedge funds and mutual funds and the institutional money, they all own a piece of those rocks. The Barricks, the Newmonts. And then you start to get down into the intermediates. I could name names all day, but you start to get into Agnico Eagle, or it's there's a company called Osisko. It's not Osisko Royalties. There's so many. There are many of them. Although a lot of people who are outside the space don't really know which ones they are. Here's where the newsletter matters come in. There are different newsletters out there. On the Australian side with Port Phillip Publishing, in the U.S. there are more than a few good newsletters. I was writing one, and for publishing reasons we gave it up a while back because and we switched to this whiskey and gunpowder. It's in a way, it's a lot of fun not to be managing a portfolio or not to be running a portfolio, because I can just sort of do what I want now. I'm not sort of a slave to names that I listed 3, 4, 6 months ago or whatever. Part of what we're talking about has to do with a presentation at the Sprott Natural Resource Symposium in July of 2020. Theoretically, it's in Vancouver, but really it's online. So you can be anywhere in the world. And if you have an internet connection, you can listen in on it. There are lots and lots and lots of great companies that are represented at the Sprott outfit, the Sprott conference. I personally have spent a lot of time in the last 3 years, actually the last 5 years, when I think about it, in Quebec, in the Yukon of Canada, in the Western U.S., in Nevada, Idaho, and Montana, and down in northern Mexico and Sonora, and a little bit in South America. I've got a list of names that I like. They range from substantial size juniors to tiny little guys. Little. But I will talk about them, or I have talked about them in the context of Sprott. I don't want to start naming names because we'll burn up all our time. But for those who are on the outside looking in, I assure you that the gold mining space is wide open for smart investing, and there's a lot of upside. Be warned, there's downside too. There are some days are better than others. Things go up, things go down. But as long as the dollars are weakening, and as long as the gold price is strengthening, your gold, your royalties, your mutual funds and large funds, and then the appropriately run mining companies will do very well. Although I assure you there are a lot of just scammy little companies out there too that will gladly take your money and blow it down at the bar.
That's a really nice recap of the fact that investors are spoiled for choice when it comes to gold and silver companies at the moment. Obviously, we know a lot of the companies that participate in Sprott are incredibly well run. And this goes all the way back to when we were talking about K92 and how incredibly well run that company is. So if investors don't want the hassle of picking individual miners. They can look at royalty companies, which present great opportunities. The other key answer there is you don't need to go for a 10-bagger. You need to look for a management team that are going to, as I like to say, under promise and over deliver. That's really what we want to see our companies doing.
Well, that's the K92 story with the management team that's now Fosterville South. I mean, when I started looking at K92, it was a 30-cent stock. Today it was over $4. So that's, do the math. That's about a 12 or 13 bagger right there, and with more to go. And Fosterville, I mean, when I started looking at it, it was cheap, and now it's like 5 times what it was when I started looking at it. So Fosterville South. There are other companies that have not quite made their move yet, or they've just started their move. And again, I'm I hope that the listeners and viewers understand. I'm not going to just give you a bunch of names right here, right now, because I just don't want to. I don't want to throw that at you. In my talk at the Sprott Conference, I will mention some names. I've got my Yukon names, my Nevada names, Idaho, Sonora, Mexico names, some South Americans. Great companies. I mean, in terms of what I do, I mean, well, what I did before we got shut down from the virus, I used to jump on an airplane and fly to the Yukon, fly to Nevada, fly to Peru, fly to Chile, and kick these rocks. I'd be out there with my boots, with my Brunton compass. You see my Brunton compass here?
Yep.
We were talking about this before we came on the
certainly
air.
Were.
Yeah. I'd be looking down at the microscopes, looking at the little lenses, and show me your maps, show me your geophysics, smacking things with hammers. So you get to know the geology, you get to know the management team, you get to know the feel for what's going on, and then you follow it over the years. You follow these things. It started out as a brown stain on a hillside, and it wound up as a big project. I'll mention one name in the Yukon, Victoria Gold. I mean, Victoria Gold, I started looking at them when it was a hillside full of trees. And I was there last fall holding in my hand a 66-pound gold bar that they had just poured. Well, they hadn't just poured it, it cooled down. But I was holding a 66-pound gold bar that they had poured, out of the project that they had built. At one point, they had to raise a lot of money. They were the largest single construction project in Canada. They were spending over $1 million a day, just in terms of labor, concrete, steel, wiring, what have you, building this mine. It's up and running, and it is a splendid mine. And the shares that used to be 20 cents are now three, four, almost $4. So no more than that. They were, whatever they are, they're high and going higher.
Yep.
So many things to keep in your head here.
Well, the point is that this is where experience comes into it, and obviously your background as a geologist and your experience in writing is that you help sift through the dud companies to find the good ones.
Yeah.
Now, we're probably getting close to time. And I mean, Byron, you and I could talk all day. We both know that. I did want to come back to one subject. I'm just trying to find it through my notes. And this was at the start of the shutdown of the coronavirus. So we're sort of going a little bit back in time. You and I were emailing, discussing the impact on our local economies. But you made it, again, what you thought was an off-the-cuff comment, but I think it shows your remarkable insight into the mining sector, is you made a comment that when it comes to shutting down mines and smelters, it's not just turning off a light switch. It's a far more intensive process than that. And it's not so much just the shutdown at the start that there's a problem. It's, all the flow-on factors from that. So could you explain a little bit about how these places get shut down, the impacts that they have, and how long it can take them to, get back online when we need them?
Yeah. As people certainly know, I mean, the virus started to really, it was in the newspapers in January and February, but it really started to become a thing, at late February and into March. And by the middle of March, a lot of mining operations across the world, but certainly in North America, South America, were slowing down, slowing back, shutting down. And you say, well, what does that mean? You don't just park the trucks, turn the key, and walk away. I mean that is part of it, but depending on the mining operation, you've got water that seeps down in there. You've got to keep the pumps working. Maybe they shut down because workers were getting sick. Maybe they shut down because they were worried workers were getting sick. Maybe they didn't shut down. They just throttled back. They slowed things down because of social distancing. They couldn't have as many people, working on the project. Maybe they shut down because everything was fine at the site, but the road was closed that they haul their supplies in and they haul their product out, or they couldn't get things through the port, down by the ocean. The ships weren't docking. The supply chain was interrupted. Couldn't get the explosives, the chemicals, everything else that they needed. So there was a slowdown that affected way more than 40%, probably 50% or more of the world copper mining, gold mining. I mean, a lot of these metals are interrelated. You have a copper mine, but it produces gold, silver. You have a gold mine, it produces copper or zinc. And so a lot of these things slowed down. Some of them shut down completely. Now, months later, people are like, okay, we're going to get started back up. You don't just go and flip on the switch and fire up the diesels and stuff. And again, that is part of it. But you've got to make sure that all your supplies and your roads and your port system is working. Perhaps there was an issue with the electric power supply. Maybe there was an issue with the water supply while you were shut down. When you shut down and you lay people off, maybe they stick around. Maybe they go somewhere else. Now you've got to get your workforce back together. You've got to retrain your workforce. And certainly in terms of just workplace safety, you've got to get people, into that sort of mental state of safety. You're mining ore, but you don't want to kill anybody. You don't want to crush people or hurt people or drive over people, things like that. And so you've got to get these things. Don't just go from 0 to 100% overnight. It could take months if you've shut down the processing chain. You've got to get the rock out of the ground. You got to get the ore to the crusher. You've got to crush the ore. You got to get the ore to this other place. You've got to do other things with it. You have to treat it with chemicals. You've got a mill that's full of pathways and piping and conveyor belts, whatever. You've got to get this stuff all running together. You got to get the chemistry balanced again. It could take weeks to get that chemistry balanced. You're taking samples every 15 minutes. This stuff, is this where we want it? Because if you don't do this, you're running an inefficient operation. You're throwing perfectly good gold or silver or copper, into the waste pile. So it shut down quickly, kind of because it had to, but it's going to ramp back up slowly. And meanwhile, you've got issues with you've got global issues that have to do with financing and banking. You've got issues of just the ability to move product. I mean, for the gold miners, it used to be that if you had gold bars or you had gold whatever, you could literally take them to the airport, put them in the hold of a commercial airliner, and it would fly off someplace to the next step. There's no international commercial airlines now in Australia. What did Qantas say? We're not going to be flying international till March.
Next
July.
2021. Yeah.
Yeah, do the math. I mean, and so in terms of just moving things around, you've got people chartering private jets to move gold bars or what have you. So if everything got back to normal tomorrow, just like we woke up tomorrow morning, it was going like, oh, it was a miracle, but the bug is gone. Everybody's, hey, great. It's still going to take months to undo the shutdown, and so people need to be aware of that. And again, as we're finishing up, the point to really take away from all of this is that we're in an inflationary world. We had a heart attack to the whole world economic system. I mean, it was like the big one. It was the left anterior descending artery, the Alaska pipeline of that runs the world. It shut down, and we got tens of millions of people unemployed. Governments have thrown trillions of dollars at it across the world. U.S., Canada, Australia, you name it. Governments are throwing money at it. We're going to have inflation. Gold and silver are a way to protect your wealth during this time. And there's a lot of ramping back up. There's a lot of runway in front of us. If you're watching this now and thinking, "Oh man, I missed the train on this. It's too late to get in." No, it isn't. You have to be smart about it, but it's not too late. There are people out there who are more than willing to help you. The first person that has to help you is yourself. and you need to get smart about this. Subscribe to Shae's newsletter and the things that her group publishes, Whiskey and Gunpowder. I mean, we're not really a portfolio newsletter, but there are other newsletters that do run portfolios. There's plenty of really good stuff on YouTube, from places like Kitco and Sprott. Our friends at Sprott have really great, no cost to you content that they put on YouTube. If you're not smart about it, get smart about it, because this is a big part of your financial and monetary future. So
I couldn't think of a better note to end it on, Byron. That was fantastic. Once again, thank you very much for your time. Thank you for joining me in your evening, my early morning. As usual, it's been wonderful to chat with you.
it's great to see you and speak with you, and I wish you well. And to our friends in Australia and Canada, wherever you may be, we wish you well in all that you do. Thank you.
Thank you. And best of luck with your speech during the Sprott Conference as well.
Thank you much. Appreciate it.